Assalamu alaikum. In an earlier video, we had discussed that any bank performs two functions. First, it collects funds and then channelizes those funds where those funds are needed for productive purposes. This is called the function of financial intermediation. We had also seen that what constitutes riba or what is the definition of riba. So riba is any gain or profit earned by the lender in a contract of loan. So riba is any profit that a debtor pays to the lender in a contract of loan. Now, how does the conventional banking activity or the financial intermediation that a conventional bank does involves riba? So conventional banks primarily are money borrowers and lenders. They perform the financial intermediation function by borrowing money and then lending money to the sectors which require those funds. For financial intermediation purpose, they use primarily or majorly they use the contract of loan. So for all financial intermediation that conventional banking does is based on the contract of loan. So majorly the financial intermediation that a conventional banking does is based on the contract of loan. And lending contracts can be seen on both sides of its balance sheet, whether it's the liability side or the asset side. Now let's see how a conventional bank's balance sheet involves riba. Like all balance sheets, a conventional bank's balance sheet involves a liability side or a sources of fund side and an asset side where those sources of funds are deployed and assets are created. On the liability side, a conventional bank has various products through which it generates or sources funds from the economy. A major product that a conventional bank offers is a savings account. Under the savings account, the bank and the customer enter into a contract of loan under which the customer agrees to deposit funds or give loans to the bank, and in return, the conventional bank agrees to provide a certain percentage of profit to the customer. Now, this percentage of profit, since it is coming through the contract of loan and it is being paid to the lender, where the customer is the lender and the bank is the borrower, so this profit becomes riba or riba an-nasiya. So we see that under the savings account, a customer enters into a lending contract with a conventional bank and lends certain amount or deposits certain funds in his account under the contract of loan from time to time. And on those deposits or on that deposit, the bank pays a certain percentage of profit. Hence, we see that savings account result in riba, which comes in form of profit that the conventional bank pays to the customer or the depositor. Now, coming to the current accounts. Current accounts also are a contract of loan between the bank and the customer, under which the customer is the creditor and the bank is the borrower. So the customer is the lender. But we know that in current accounts, the conventional bank does not pay any form of profit to the customer. Therefore, the current accounts do not involve riba. Current accounts are based on the contracts of loan, but they do not involve riba because there is no profit or gain being given by the conventional bank to the customer. And this is because riba is any gain or any profit that a borrower pays to the lender under a contract of loan. So riba is basically the profit that is given over and above the principal amount. So since in current accounts there is no profit or no benefit being given to the lender or the customer over his deposit or on his deposit, the riba does not come into the picture in case of current accounts. So saving accounts, since saving accounts involve giving of profit by the lender, by the bank to the customer, it involves riba, but current accounts do not involve riba in this case. Next, we come to fixed deposit. Fixed deposits are deposits of fixed maturity given by the customer to the bank. Again, the underlying contract in fixed deposits between the bank and the customer is a contract of loan. Under this contract of loan, the customer agrees to deposit or lend a certain amount of money, for example, $1,000 to the bank for a fixed period of maturity, say 6 months. So it's a fixed maturity loan given by the customer to the bank. And against that fixed maturity loan, the bank, of course, agrees to give a certain percentage of profit. For example, 3% or 5%, whatever is agreed between the bank and the customer, or whatever the policy of the bank is. So it's basically a loan contract. Fixed deposits are a loan contract between the bank and the customer, under which the bank is giving or lending certain amount of money and the bank agrees to pay profit on that. So here also riba is involved, or riba gets into the picture, and riba is being paid by the conventional bank to the customer. Interbank borrowings. What are interbank borrowings? Interbank borrowings are borrowings between different banks in a country or in a regulatory environment. So one bank, if it is short of funds, it can go into the market and ask funding from another bank. So when the other bank lends certain amount of money to the borrower bank, of course, agrees to pay a certain amount of profit or benefit to that lender bank in return for those funds. So again, we can see that this involves riba. So any gain given on any amount of money loaned by the other bank, for example, the other bank gives $100 million to this borrower bank, and the borrower bank agrees to pay, for example, 2% profit rate on that. So that 2% profit rate is over and above the principal amount of lending, and this becomes riba. Now, this is the way a conventional bank sources its funds or its deposits. Now we look at the asset side. Once these funds are accumulated by the conventional bank, or from time to time when these funds are being accumulated, these funds are also being deployed on the asset side at the same time. Now, how does a conventional bank deploy these funds on the asset side? The conventional bank deploys these funds by giving loans to various entities. For example, a corporate company comes in and they require funding for their projects, or for expansion of their existing premises or factory, plant, and machinery. So the conventional bank, they will disburse a loan to these customers or these corporate companies. And against these loans, the conventional banks will charge a certain percentage of profit. So if a corporate company requires $5 million for expansion, both parties will sign a contract of long-term loan. The 5 million will be disbursed to the corporate company. And against that disbursement of loan, the conventional bank will charge a certain percentage of profit, for example, 5% or 6%. And that corporate company has to pay that profit or interest, as well as pay back the principal of 5 million over a period of, say, for example, 5 years. So any long-term loans or any long-term financing that a conventional bank does, it does on a contract of loan. And on that contract of loan, they earn a certain percentage of profit, which of course is riba or riba nasiya. Similarly, in case of short-term loans, a corporate company might require short-term loans for working capital financing. So they might need funding for working capital requirement, like paying salaries, paying for utilities, or buying raw material. So they need very short-term nature of funding for that purpose. Say, for example, they might require funds for only 6 months for such working capital requirements. So in this case also, a conventional bank will give a short-term 6-month loan to that commercial or corporate entity. And both parties will enter and execute a contract of loan, and the conventional bank will disburse the funds, for example, $100,000 or $200,000 to that customer, and charge a certain interest or profit, for example, of 6 or 7%, and that entity needs to pay back the principal of the loan along with the 5% or 6% interest or profit on that loan after 6 months. So we can see that on the asset side, where commercial lending or corporate lending is involved, a conventional bank primarily uses the contract of loan to provide funding to the corporate companies and businesses. Now, if we see what happens on the consumer lending side, or the retail banking or the consumer lending side, where a conventional bank usually provides financing or lending to individual customers. So in commercial or corporate lending side, a conventional bank provides business financing to businesses and corporate companies for business purposes. On the consumer lending side, a conventional bank offers or provides financing to individuals for individual needs and requirements. So on the consumer lending side, a major product that is used by conventional banks is housing or mortgage loans. So if a customer requires housing, he doesn't have his own funds, or he has his equity is very limited, he approaches a conventional bank and asks for home financing or housing finance. Under the housing finance, a conventional bank enters into a contract of loan with the customer. So if a customer requires, for example, $100,000 to buy a house, a conventional bank would loan or lend $100,000 through a contract of loan. So the customer and the bank will execute a contract of loan, and under that, the conventional bank will disburse $100,000. Customer will use those $100,000 to buy a house. The house belongs to the customer, and it is mortgaged as security to the bank. So the bank is not the owner of the house in this case, and it is only taking the house as a security or as a mortgage, while the customer is the owner of the house. And the mortgage and the security is taken to secure the funding or the lending that the conventional bank has given to the customer under the housing loan. Against this lending, a conventional bank, of course, charges an interest or a profit, which can range from any amount, which can be, for example, 6%, 7%, or any percentage of interest agreed between the bank and the housing borrower. So this profit, of course, is a form of riba. It's riba and nasiya, which is prohibited as per the Islamic law. Similar is the case in case of auto loans. So when a customer requires funding or financing for buying a car, a conventional bank would simply enter into a contract of loan with the customer, and the customer would use that amount of loan to buy a car for himself. The customer then needs to pay back the principal amount of that loan along with profit to the bank. In case of personal loans, again, a customer requires personal loan for example, going on a vacation, or he requires a personal loan for medical purposes or for any other purpose. He will approach the bank, and the bank, after doing its due diligence, would enter into a contract of personal loan with that customer and disburse a loan amount to the customer so that he can use it for his vacation, medical, or any other purpose. On that amount of loan, a conventional bank, of course, again charges a certain percentage of profit or interest. In case of credit cards also, the underlying contract in a credit card is a contract of loan. So a customer approaches a bank issues a credit card to the customer. Whenever the customer uses that credit card, either for buying in a physical retail outlet or online, what happens is that the bank pays to the vendor, or the bank pays to the merchant on behalf of the customer. So when bank pays to the merchant or the vendor on behalf of the customer, under what contract that payment is being made by the bank? Why is bank making that payment to the merchant or the vendor? Again, the underlying contract for such payments is a contract of loan. So when a bank pays to the merchant or the vendor on behalf of the credit card customer, the bank is actually making or disbursing a loan to the customer and paying on his behalf for his purchases. So it's a contract of loan, and it's a loan that is being disbursed by the bank to the customer. On that loan or on that funding, the customer has to pay within a certain period of time. If he pays 100% within that period of time, there is no profit or interest charge on the customer. But in case the customer does not make that payment within that period of time, the bank charges a certain percentage of profit to the customer for that loan amount. So that again becomes riba or riba nasiya. So from this, we can see that on both sides of the balance sheet of a conventional bank, riba is highly prevalent. Why is riba prevalent? Because the primary contract that the conventional bank uses for sourcing of funds, that is deposit generation or liability generation, that is sourcing of funds, involves a contract of loan. So when a contract of loan gets involved and the borrower is agreeing, that is, the conventional bank is agreeing to provide a certain percentage of interest or profit or gain to the lender or the depositor or the customer, that becomes riba or riba and nasiya. So that is how the liability side of the conventional bank involves riba. And we have seen on the asset side also, once or from time to time, when the banks deploy the funds that they have sourced on the liability side and create assets by giving long-term loans, short-term loans to corporate or commercial or business entities, or in case of housing loans, auto loans, personal loans, or credit cards to retail or individual customers, they are entering into a contract of loan. And on that contract of loan, again, they are charging a certain profit to the customer. So on the asset side, the bank is the lender and the customers are the borrowers. And when under those contract of loans, the borrowers or the customers are promising or agreeing and paying certain profit or gain to the bank. And hence this becomes riba or riba and nasiya. So this is the way we see that conventional banks, when they're doing financial intermediation, when they are collecting deposits and sourcing funds, and when they are deploying those funds on the asset side, both sides of the financial intermediation function involves riba or riba and nasiya. I hope this discussion was useful. In our next video, we will discuss how Islamic banks do financial intermediation and how does Islamic banks financial intermediation does not involve riba or riba-based contracts. If you have any questions, you can mention those in the comments. Jazakallahu khair. Assalamu alaikum.